What a day for the market, and Tesla actually closed today around $228, and we are now pushing into this institutional level. We had a great day. I ended the day actually up about $64,000. There was a lot of misplays. We're going to talk about that today, and we're going to go over what I could have done better. More importantly, we're going to go over if I think that this is the actual breakout on Tesla and if we're going to get to the move of 260 to 300 sooner than I'd initially expected. My $300 target for Tesla was for the end of this year, but if we actually push through the levels that we're going to talk about in this video, it could confirm the breakout much sooner. Now, the first thing that I want to go over is the smaller time frame setup that you'll see here. Most of the time, we are looking at daily and weekly charts, and all of the same exact things that we look for in the daily and the weekly charts, we can also look for in smaller time frames. All of it is applicable whether you're trading a 15-minute, a 1 hour, a daily, a weekly, or a monthly. Now, if you're somebody who works a full-time job, it's important to know this stuff, but I don't want you watching the charts while you're at work. Instead, I think it's much more beneficial to, really just focus wholly on the 4 hour, the daily, and the weekly. But I want to talk about market structure on the smaller time frames and how we timed this move right here to perfection. I called this out on X and I called it out within our private community. And this was a move of about 4.8% in 5 hours. So we're going to talk about this move first. What we're going to do is actually zoom out and look at the daily chart. I highly recommend you go back and watch yesterday's video because we broke this daily chart down in extreme detail. And in that video, we were talking about how we needed to push through this institution level of about $230. We know yesterday, one of our favorite indicators, the BX trender, which we have free courses on, you can see closed with a higher high. This is a sign that money is actually stepping in and that this might not be a fake breakout. And so today, what we were looking for is price to break through the short-term bearish structure. So basically, what we were going to do at this point, we'll remove this smaller one, is that we look at our most recent swing high and most recent swing low. So at the time, we're going to go back to Tuesday, which was yesterday's session at 10:30 in the morning. We take our Fibonacci from swing high of 234, we pull the Fibonacci down to a low of 210. The area that we're looking for here is called the golden zone. Same thing that we look for on the bigger time frames. In this case here, we're looking for an area of potential rejection. So we think that that could happen within 227, 228, worst case $230. So we know that on the 1 hour, we're in a downtrend, right? Even though the bigger time frame is in an uptrend, the 1 hour is in a downtrend. So what I'm expecting in this case is price to push back into this level, then potentially reject. Now, if we move in on a smaller time frame, you're going to notice that the same exact structure that we use each and every single day can be used granularly, on the smaller time frames. The way that you can do this is by looking at this most recent pool here. If we can take a fib retracement from swing low to this swing high, you can see that price pulls right back into our EQ, does not come into the golden pocket, but then we end up bouncing. So the same exact situation ended up happening yesterday. If we take the Fibonacci retracement from swing low, which is Monday, the 9th of September at 1550, and we take that up to swing high of $225. If we pull this level out, you're going to notice that the smart money level is going to be sitting here at about $218. And the institutional buy level that we're looking for is going to be sitting here at the golden pocket. So at this point, we would expect price to bounce within this discounted range and most likely come up and hit equal highs or higher highs. And you can see that that's exactly what occurred yesterday. So if we go into this morning session, you're going to see that price sells off once again on CPI data. So now we're going to redraw that market structure. Instead now of going from this low, we're going to go to the most recent low, which is at 218.84. From swing high to swing low, you're going to notice that the same exact levels set up and are holding. If we look at our institutional buy level, it's basically 221 down to about 220. And our smart money area, actually, it's an institutional buy level, is right under that at $220. So, what we want to see is price actually pull into that smart money level. Now, there are times because our stop loss should be set not right here, but just below that lower low. So, there are times that we'll pull right through that liquidity, but this would have been your most optimal time to enter. This is when we posted it within the X account. From this point, price actually drives underneath that structure, breaking. But here's the last thing to notice. So now you can see in most cases, price will push into a higher high. At this point, we actually pull back down into the golden pocket, and it's a good sign that price gets bought up pretty quickly. From there, you can see that it continues to sell off directly into that smart money zone. So from this area, we know, hey, trend has to hold. If this smart money zone is broken and we actually crater under $216, then the trend for the rest of the day is going to be bearish and price will probably sell back off to 211. So if we're looking at a setup like this, entry right here, stop loss at a lower low, so about 214.50. It's about a 1.5% stop loss to an upside of about 226 to 227, or just even equal highs. That's all we need back up here. That is a 4% upside. So that's almost a 4-to-1 risk versus reward. And if this move could happen within a day or two and we get 1 month to 2 month out at the money option calls, this could be a huge trade. So what we want to see is price bounce aggressively off of that smart money level, boom, which is exactly what happens. From here, we're going to monitor the BX trender. We want to make sure it's making higher lows and higher highs. This is showing that there's serious strength behind it. Now, to be quite honest, at this point, when we start to see this curling, I'd sell half of my position. The reason I like to do this is that number one, I'm locking in some sort of profits. So from a dopaminergic aspect, I feel like a winner. I get a little bit of dopamine. I'm like, oh, I'm a winner. Cool, nice, right? I know it sounds dumb, but I've been doing this for 9 years and I know that those small things really do make a difference. Then if price does pull back into test smart money zone again, I have the other half of that position to average down with. And if not, I at least have half exposed to the upside for this continued rally set if it should occur. Price continues to push, and then as we get this push into the institutional level, this is where we would be taking our profits and selling, which is about a 4.66% return. And once again, we can see what happens tomorrow. If price rejects off of this level, well, guess what? There's a chance that once again, we might see a pullback down into the smart money level and we could potentially go long. However, if we look at the 1 hour, you guys know that yesterday we talked a lot about this potential setup that's happening on the 1 hour chart for Tesla and about how if we can push through this level, that will be the confirmation of the move back to 260. So with a nice day like today, we have to still see price push through 230. We have this institutional sell level that has to be taken out. And on top of that, we have that smart money level up at 230, which is going to be the last area of potential resistance. So I think that once we get through this level, there's really going to be nothing stopping us from that longer term breakout. You can also see that we have a very wonky inverted head and shoulders. So I do think that we're going to see Tesla, as long as we don't reject here tomorrow into Friday. I think PPI is tomorrow. I'm not 100% sure in the morning. But if we can push through 230 and we do not drastically sell off for the rest of the week, knock on wood, then we should see this continued breakout. I'm still in my February calls. I still have capital on the sidelines to average down if we do end up rejecting here. But these are the levels that you need to be watching.